What is technical analysis? Technical analysis involves analyzing the charts and looking for information like prices, volumes, levels, patterns, and open interest in order to predict the future price movements based on the previous behavior of stocks. Technical analysis can be carried out upon any period of the interval of time as per your requirements. An investor who is looking forward to park his money for the long run might consider the 1-day or 1-week candles, while an intraday trader might be interested in the 1 minute, 5 minutes, 15 minutes, etc. intervals based on his trading setup. We use technical analysis to get an estimation of where the price of a particular stock, index, or index is heading based on calculations performed on the prehistoric data. A good understanding of price action levels, and application of technical indicators with a proper risk-rewards rations and control over your emotions are all that is needed to be successful at day trading. What is fundamental analysis? Fundamental analysis is the process of evaluating the company based on its financial data, socioeconomic factors, competitor analysis, management track record, goodwill, etc. to calculate the expected price targets for the long run. Fundamental analysis helps us to derive an intrinsic value for the stock and helps undertake an informed decision before getting invested in it. Most of the time, the market price of a stock tends to adjust itself towards the intrinsic value. If the market price of a stock is below its intrinsic value, then an investor would consider purchasing the stock if he believes that the company would overcome the present pricing and to rise up and move towards its intrinsic value and vice versa. Understanding the difference. The difference between the two approaches comes down to what determines a stock's value and price. Fundamental analysis considers the value of the company. This ultimately depends on the value of its assets and the profits it can generate. Fundamental analysts are concerned with the difference between a stock's value and the price at which it is traded. Technical analysis is concerned with price action, which gives clues as to the stock's supply and demand dynamics, which is what ultimately determines the stock price. Patterns often repeat themselves because investors often behave in the same way in the same situation. Technical analysis is concerned with price and volume data alone. Tools used for fundamental and technical analysis. Fundamental analysts consider a company's financial positions and performance, the market in which it operates, competitors, and the economy. The most important source of data for fundamental analysis is the company's financial statements. These include the income statement, balance sheet, and cash flow statements. Data from these statements can be used to calculate ratios and metrics that reflect the company's performance, health, and growth rates. Industry data and economic factors, like interest rates and retail spending, are also used to forecast future growth rates. Ultimately, fair value is arrived at after comparing several models and ratios. Technical analysis is a lot broader than many people realize. All chartists use price charts, usually either line charts, bar charts, or candlestick charts. Apart from price charts, the tools used can vary widely. Some analysts use indicators like moving averages and oscillators calculated from stock prices. Others use price patterns and complex analysis frameworks like Elliott waves and market profile. Trend followers use other tools to identify price trends and measure momentum. Fundamental versus technical analysis, which is better? The debate over fundamental and technical analysis is contentious. Proponents of either form of analysis often write the alternative off but misunderstand that they can both have their place. Fundamental analysis is most useful for long-term investments, while technical analysis is more useful for short-term trading and market timing. Both can also be combined to plan and execute investments over the medium and long term. Short-term price movements are determined by supply and demand, which are in turn affected by a lot more than what typically goes into fundamental analysis. Market sentiment and the effect of emotion on market activity can only be analyzed by using price and volume data. On the other hand, charts cannot be used to determine whether a stock is under or overvalued, and what its value may be years into the future. Charts reflect what has happened in the past, and their value diminishes the longer the time horizon. Pros and cons of fundamental analysis. Analysis based on a company's financial and competitive position has several advantages. Analyzing the environment in which it operates is also of value. Focusing only on the business, rather than on the stock price, gives investors an idea of what the company is actually worth. This is invaluable for long-term investing. Investing during market bubbles can be rewarding, but it's still important to know when the market is in a bubble. Portfolio risk can be managed by calculating the premium to fair value, at which stocks are traded. Asset allocation decisions can then be made to reduce the potential downside of a portfolio. The biggest profits are usually made by the investors that are correct when the rest of the market is wrong. This can only be achieved with fundamental analysis. Also, decisions based on fundamental analysis typically have a higher probability of being correct, particularly over the long term. There are also several drawbacks to fundamental analysis. It's important to be realistic about its limitations. Fundamental analysis is time-consuming, each company must be studied independently and in detail. Most of the information used in fundamental analysis is widely available. To gain an edge with fundamentals, you need to find unique datasets that aren't available to most investors. Fundamental analysis tells you very little about what might happen in the short term. Short-term price movements and volatility cannot be forecast by looking at financial statements. Fundamental analysis is a lot less precise than often perceived. Valuation models like the discounted cash flow model are based on numerous assumptions that are seldom very accurate. Target valuations can be useful on a relative basis, but are limited when it comes to valuing a company more than 1 or 2 years into the future. Pros and cons of technical analysis. One of the major advantages of technical analysis is that stocks can be analyzed quickly. Also, some tasks can be automated, which saves time. This means a technical analyst can cover more stocks and draw ideas from a larger universe. Technical analysis can also be used to identify price targets and levels at which an idea is obviously wrong. This allows traders to create investment strategies with clearly defined risk and reward profiles. In the short term, price action is affected by several factors that fundamental analysis cannot pick up. The effects of market sentiment, market psychology, and supply and demand can all be observed by looking at a chart. Technical analysis can be used to improve timing and to trade strategies appropriate to market conditions. It can improve hedging strategies by improving your timing when short selling or buying options. By looking at a chart, you can quickly see whether a stock price is in a trading range or a trend. Some technical strategies can be backtested. This means they can be scientifically tested and applied. Strategies that can be backtested form the basis of many algorithmic trading strategies. Technical analysis does of course have its drawbacks. First amongst these is that while some technical approaches can be backtested, many cannot. Pattern trading, Elliott wave analysis, and other forms of technical analysis are subjective and rely on judgment. Using charts is often regarded as more of an art than a science. Technical analysis frequently results in ambiguity. Two technical analysts can come to very different conclusions about the same stock by using different approaches. Charts often appear very different in different time frames. And, with a large number of analysis methods, indicators, and time frame available, forming a single view can be a challenge. This happens often and is known as analysis paralysis. Technical trading setups have a relatively low win rate. While a pattern or setup may have an edge, the win rate is often less than 60%. To trade setups like this profitably requires a large number of trades. Using fundamental and technical analysis together. There are several ways in which technical and fundamental analysis can be used effectively together. The ways you can combine the two methods. Simply looking at a price chart can give you an idea of the direction of a trend. This will give you an idea of whether the market agrees with your valuation or not. You should have a stronger conviction when going against the crowd and also be prepared to exit quickly if a stock is widely owned and the fundamentals change. You can build a watch list of stocks you are prepared to own based on fundamental analysis, and then use technical analysis to decide if or when to buy them. Quantitative studies have found that a combination of value and momentum can be an effective method of stock picking. In essence, stocks trading on low valuations but with strong momentum tend to outperform. Technical analysis can be used to find favorable entry levels for growth stocks that are in an uptrend. Companies that have high growth rates and trade on high valuations often experience large corrections. In such cases, technical analysis can be used to identify oversold levels. These are often the best opportunities investors will ever get to buy growth stocks. Stocks can continue trading higher long after they become overvalued. Selling a stock just because it is expensive often means missing out on a large percentage of a rally. By using price and volume trends, you can continue to hold the stock until the momentum is exhausted. If a stock is trading close to its fair value, it makes sense for the price to consolidate or trade in its range. While the fundamental picture remains the same, you can use technical methods to trade within the range. Fundamental research can sometimes be used to determine which parts of a business cycle are most profitable for a company. Technical analysis can then be used to confirm anticipated trends. Technical analysis is a tool that gives you signals for entry and exit based on prehistoric prices and levels. It is more suitable for trading purposes and for finding good entry points while investing. Fundamental analysis, as the name says, helps to identify the potential pricing that can be achieved by the stock based on its past performance, financials, socioeconomic conditions, etc.